Yes, guys, I hope you are all keeping well and welcome back to another Capital Convos. It has been absolutely amazing, having you guys on the last couple of weeks. Also, we are joined with our special guest as well. In fact, you know what? He looks like he's become a permanent guest here by the looks of it. So welcome, Drew. Welcome back again. This has been very, very highly requested that he comes back on because he was a bit of a joker last week and we love hearing his knowledge and jokes as well. So welcome back, Drew. We're happy to have you again.
Thank you, Ads. Happy to be here. Happy to hop on as always. I'm loving it so far.
Definitely. We always love it when you come around as well onto our podcast, watching it and joining us as well, being on, the first-hand side of things as well.
We interrupt this program to bring you a special report.
Introducing Capital Convos.
Let's go straight into it. So obviously a lot has taken place over the last 7 days. By the time you're watching this, it will probably be Sunday or Monday, start of the new week or whatever. But the day we're actually recording this is Thursday, and Joe Biden was elected yesterday. Yeah, big news for the US, or not elected. He was elected. Sorry, my bad. He was elected, many months ago, but he actually came into inauguration finally yesterday. Now that was a bit of a big ceremony. We saw Trump, finally walk away. He was very, very sour, in fact.
Yeah.
But what do we think of the future of the US? In fact, Mark and Drew, what do you guys have in thought of what's going to take place in the future of the US? Obviously, it's a complete guess because none of us are genies. None of us can predict the future. I wish I could, because we'll all be lottery winners every single week without fail. Yeah, but you know where I'm coming from. What do you guys think of the future of the US now?
Go on, Drew. After you.
I believe from an economic stance, I believe that we've got some weakening of the dollar ahead of us. I believe a fair bit of stimulus is going to come in, especially sort of the conditions he's stepped into. And obviously, he's not going to be making every sort of call from this angle. But like I said, from an economic stance, I do see a weakening of the dollar. Again, that S&P and the Dow is just, can it climb? Like can it continue to climb? Who knows? But for me, I see some weakening. I see some pullbacks. I see some short-term weakening and definitely long-term weakening of the dollar.
Yeah, 100%. That's what I agree as well. I think I know you got to understand what Biden, this, as you said, Drew, the situation he's actually coming into. How one, he's got Janet Yellen, so obviously she used to be the Fed chairwoman, and she was known as a dirty floater, and that's known as she was constantly manipulating the dollar up and down through their monetary levers. And obviously now she's the Treasury. She's saying something about the weakening of the dollar, and it's not in her interest of that. By her telling us that we just have that kind of inclination of it is going to weaken. Obviously, there's going to be a lot of stimulus. I know Biden's passed off some $1 trillion injection. So that's like that money supply is just constantly going up. That M2, again, I've mentioned it many times. The M2 is just climbing higher and higher and higher. And as that climbs up, it becomes more inflationary. And that's when you look to short the dollar in inflationary environments. And obviously you buy in deflation. But obviously at the moment, it's in an inflationary environment. So that's why we're seeing very weak dollar. And that's why I see DXY going all the way down to about 80.
Absolutely.
Which is a long way. But it's definitely a target that I know a lot of people are targeting as well, or around that area. I like to go for whole numbers. So that's why 80 is my target. I'm sure you are the same as well, Drew and Ads. But yeah, I see Biden. It's going to be very, very difficult to see any type of strength in the dollar. Short-term strength, yes, but long-term, no.
Yeah, absolutely. And to sort of add on to that, I mean, one thing we need to understand is from a stimulus point of view, injecting that much money into an economy, it's not going to resolve everything overnight, and it's not going to impact overnight. And, from a retailer stance, most people will see that information and think, right, okay, the dollar is now completely battered and weak and it's going to sell off from this exact moment. And that's not how economies work, and it's not how things develop over time. the stimulus, yes, it's being injected. It's got to go through many phases before that sort of gets pumped into the economy and it gets circulated within the economy. And that M2 supply, that's why it creeps up, but it takes its time to creep.
Yeah.
And this takes, multiple financial quarters. So for now, I am seeing, long term, I should say, I'm seeing a Dixie, definitely down to 85 minimum for me. And then you can sort of assess from there, 85 to 80, we can sort of go from there. But I mean, what we need to remember, and sort of, I use the word loosely, retailers need to sort of look at, is that don't just expect it to sell off like that. It will sell off, from in my head, I say it will, I'm expecting it to, but for now, let's just see how the Dixie performs. And long term, we are very sort of bearish on the dollar. But always remember, just because you see the information come out and you see there's been a stimulus, or an injection to the economy, it's not just going to go through like that and just go through every bit of the economy instantaneously.
Yeah, it's like those red folders on Forex Factory and stuff.
Oh God, not those red folders.
They'll see like them reducing the interest rates and they'll just start selling. It's like NFP, like they'll just sell if it's a negative. Yeah, if it's negative, it's bad, but you've got to think about long term. Like it might shoot down 50 pips, but then it might go up in the next candle 100 pips. So yeah, don't just sell off news, because that's just the worst.
NFP for me is literally like where is all the liquidity in the opposite direction of the market, because that's where price is going to go.
100%.
That's how
Absolutely, yeah. When it comes down to NFP, I love trading NFP because I pretty much have the same strategy as Drew. Everyone is going sell. I'll wait for it. Even if the news comes out negative, I'll wait for it to drop to that point, and immediately within a few minutes later, it will definitely come straight back up. Yeah, because it is panic selling, isn't it? At the end of the day, it's panic selling, panic buying. The minute the news comes out, everyone's going to be ending up buying or selling. If it's positive, everyone will be buying in large amounts. Yeah, but they will want to take their profits out very quickly, whereas we will go in the other direction, stay patient, come on the other side of the market and benefit from, the opposing move. But that's, based on technicals anyway. When it comes down to the future of the US, what do I think? Well, firstly, what do I think of Biden? I don't know too much about him. I haven't done too much research into Biden. Well, it is time to do some, Now I think it is about time, because he is going to rule, one of the most powerful nations of the world currently right now. One of the good things I have definitely seen on TV and in the news is that he has, released or taken off the Muslim ban, which is, very good, because Trump, I'm not too sure why he did that. I don't know the reasons behind that in the first place or whatever it is, but it's just the way he works. So Biden gives everyone an equal opportunity, which is a good thing about him as a person, to be honest, because, I respect that. And if I was in his position, I would probably do exactly the same, not single anybody out just based on their ethnicity or, their religion or whatever they believe in. Yeah, if they have something to offer to the table, no matter where they are from, no matter what color they are, we could benefit from it.
Yeah, 100%. I completely agree with that. And, it just shows that, he, as a human and as a person, he has good intention. And I believe, to reinforce that, he also put the US back on the Paris Agreement and, to do the climate and whatnot. And there's little steps like this that just give hope for, granted, we can speak about the economy in a financial stance and how, the currency wars, et cetera. But as a man, as an individual, he has good intentions, and he has, he knew what he wanted to do, and he knew what he wanted to get done from the minute he stepped in,
Yeah, definitely, absolutely, and I totally agree with that. And he's done it straight away, within his first couple of days of being in power. So ratings to him, hats off to that. I really strongly believe in equality as well. So well done, Joe Biden. I don't have much to say about him. Like I said, I don't know too much about him, however. But I just hope, he has a very strong business mind like Trump. Yeah. Trump, we all know, we've mentioned it many times on different podcasts. He's not the best person in the world, as a human. He is a bit of a twat, to be honest. But he knows what he's doing when it comes down to money. Clearly, he's a billionaire, multi-billionaire, in fact. And shall I tell you something about him? He, at first, when he was offered the Air Force One jet, to fly on, he said, "No, mine is bigger."
Fair enough.
And they,
Samsung oh my god, he's. If you find me someone with a bigger ego than him, I'll shake your hand.
Jake Paul.
Jake Paul.
I still don't think Jake Paul has a bigger ego than Trump. You know that. Wow. But moving on. So we've seen a lot happen in the cryptocurrency world, and we've got a lot of crypto viewers as well, a lot of crypto fanatics in here. I'm definitely one myself. I've been in crypto for the last 7 years now. Yeah. As we're in 2021. Wow. It's even hard to, come across that. We're in 2021. Where the hell did 2020 go?
Yeah, I know.
We just slept it off. It feels like, we woke up one day, it's New Year's, and now we're in January 2021. And I guarantee you, you know what? January 2021 is going to fly by as well. In fact, it already has. Like, we're already on the 21st.
Yeah,
wow. Great. Yeah, where did those 21 days go? It feels like New Year's was a couple of days ago. I saw fireworks in the back of my out the garden, out the window a few days ago, which is crazy. Time really, really does fly. But yeah, Ethereum moving forward. So a lot of people have asked, we always talk about Bitcoin, we always talk about XRP. What is it with Ethereum? Yeah. What do we guys think with Ethereum? Well, just a bit of background on Ethereum in the first place, just to educate you guys. I'm also making a video which should be released in the next couple of days on my personal channel about Ethereum, if you want to, a lot more deeper insight. But a quick background on Ethereum anyway, I'll give you viewers right now, just as a quick hand that you can take on board. So Ethereum is actually the second largest cryptocurrency in terms of market cap right now. It's not the second most expensive, but it is the second largest right now. Now, why is that? Well, Ethereum came along in 2014. Yeah, I wish I had invested back then, into Ethereum, because when it came out, it was only about 4 cents per coin. Yeah. It went into ICO stages for the first year, and then was released, in 2014. So that means obviously they were developing since 2013, or probably a lot longer before that. They have been developing. Who knows? Yeah, but it is not. Well, it didn't start off as a cryptocurrency. It started off as a platform. Yeah, and Ethereum is a platform globally, worldwide, for the whole crypto market to create dApps. Yeah, it doesn't have to be for crypto. Anyone can create dApps on the Ethereum blockchain. So what dApps basically means is decentralized apps. Yeah. It's not centralized by nobody. It's not controlled by anybody. And every other cryptocurrency, or let's say 90% of other cryptocurrencies out there, are now built on the same blockchain as Ethereum, because they basically built the platform. Yeah, they built the foundation for everyone else to now, use the same infrastructure as them, so they don't have to go out there and create their own. Does that make sense? Yeah. So they basically created the whole platform for the crypto market that everyone, including XRP, has now built their cryptocurrency off. So as long as the cryptocurrency market is around, Ethereum will always be around. Yeah, the stronger the crypto market grows, the stronger Ethereum goes. Now, this also comes back down to, the creator of the technology behind the development of Ethereum. And, I think Mark knows this already, but Drew may not know this. And, most of you viewers may not know this already, but Microsoft has actually created their blockchain. So we all know Microsoft is a very, very big, credible company. We talk about this a lot. There's always battles between Microsoft and Apple. We kind of know who is better at certain things, and who is better at others. Obviously, Microsoft are not good at making phones, for instance, whereas Apple smashed the phones, killing it. Whereas when it comes down to blockchain, Microsoft have that lead, whereas Apple lead in other departments, for instance, speakers, and many other things that Mark can go on and on about when it comes to the growth of Apple. So they're always back to back, but that's definitely something that I do rate Bill Gates for. He's got the brains behind the blockchain of Ethereum, which is absolutely amazing. So he didn't just create a coin, that everybody can go out there, buy, invest in, and become rich off. He created a platform that everyone else can also build their own cryptocurrencies off as well. So like I said, 90% of cryptocurrencies out there are made from the Ethereum blockchain, which is, absolutely amazing. Now, where do we see with the future of Ethereum? A lot of people have been asking, and I just wanted to get your guys' thoughts as well. What do you see in the future of Ethereum? Since now you know that kind of knowledge, they didn't just go ahead and create like a coin for people to get rich off, like most of the other cryptos out there. They went out there and created the platform for everyone else to build on.
I definitely think that as crypto gets more experience, or as more attention comes onto the market, and as it matures, it's common sense to say that Ethereum will essentially strengthen, because it's going to be adopted more and more, if that makes sense. And like you said, it's very different to every other crypto out there, and it's got more of a sort of wide scope on it. In my head, that's how I view it. And I'm not horrendously experienced like ads in this angle or in cryptos in general, but for me, from a common sense stance, of course, the stronger cryptos get, the more they're adopted, the more they're implemented, and the more institutions, companies in like the DAO and whatnot are accepting it or using them and exercising them. Then, of course, the stronger Ethereum is going to come. And of course, on a technical stance, it's just broken the all-time high. So it's showing promising steps towards the future. That's all I can sort of comment on it.
But do you think about what Bitcoin done in 2018? Do you think that might happen again? Because everyone, it was all in the media back then, buy Bitcoin, buy this, but then it crashed. I don't think it will happen, but to be honest, anything can happen. You think something like that might happen?
I mean, I think from a stance of Bitcoin, it did flop hard. I mean,
it's difficult, isn't it?
It could always happen. That's the way to put it. It could happen this second. It could happen next month, even after it maybe holds the highs for a bit and whatnot. You really do not know where the markets are going. But the way you, and the sort of Warren Buffett style of it, if you see value in it and you're just thinking of long-term growth in it, it does. Even if it did flop and then went up again and then held its value a bit more, and then, do you know what I'm trying to say? If you're looking at it from an actual long-term, obviously it's a cryptocurrency, long-term, a currency stance and a value stance. Is it valuable? Will it increase in value? Is it worth buying? Then I think so.
Yeah,
absolutely. Yeah, I think, what, anything can happen, just like you both said. And even our viewers, we all know that anything can happen in the crypto market. We've seen Bitcoin go from $200 to $2,000 to 20 grand, and then back down to like 3 grand. It's the most volatile asset I've ever seen in my life. Yeah, I've never seen something so volatile. Like one day is 20k, next day is 40k, next day is back down to 25. Do you understand where I'm coming from? And so it's not for the faint-hearted investor. If you're just looking for a few percent a year, do not invest in Bitcoin.
Get an index fund or something.
Yeah, I totally agree. So would it crash? I hope not. But there's always a possibility when it comes down to crypto. In fact, every kind of investment out there is no guarantee. Even a property investment, which is considered the safest, your house can burn down. Then what are you going to do?
Yeah.
Yeah. Even home insurance sometimes doesn't even cover, natural disasters as well.
Or
so
the 2008.
Yeah, tsunami.
Crisis.
Oh yeah, people weren't paying out. So future of Ethereum, I definitely think they started off strong right at the beginning. They built the foundations for everybody, to build their own cryptos. And as long as the crypto market keeps growing, Ethereum will also keep going as well. Price predictions, you know what?
I mean, the current price at the moment.
Before Ads chucks these price predictions in, I just note for all the viewers, I was speaking to Ads before. I've known Ads for a while now. Before Bitcoin broke the high and it's done what it's done, Ads was like, not, I'd like to say certain, and it was like, this is like a coin of value and whatnot. And the figures that Ads was saying to me, I was like, wow, okay, this is really interesting. I mean, if it goes to those sort of figures, like mind-blowing figures. So I know when Ads laughed when he said future value there, and then sort of laughed and said, well, if you really want to know what I think, if you really want to know, And people might look. I don't know what figure ads is going to sort of spit out now, but some people might look at that and go ambitious. But trust me, we've seen what Bitcoin's done.
I'd say, look, on a conservative figure, about 2.5 to 3 grand is very possible. Yeah, very, very possible. And I'm not even looking at technicals. I'm looking at the actual, growth of how they've grown so far. Yes, if it continues to grow at that same rate, not even doubling that rate, the same rate, we can see about 2.5 to 3 grand within the next 2 years. And that's
is it dollars or pounds?
Pounds. Yeah, because myself and Drew, we buy, even when we're looking at Bitcoin, for instance, we always look at BTC GBP rather than BTC USD. We're always looking at XRP GBP rather than XRP USD, because we're like OTC buyers as well. So we buy over the counter. We don't just buy digitally as well. We buy physically. So we always have to look for the pound equivalent at the same time rather than the US. US is good if you're trading it on MetaTrader, for instance, but I believe that's going to be banned.
Yeah, it has been banned, doesn't it? In the UK anyway.
Yeah,
I think.
Definitely. Yeah. If you are caught, there are brokers still doing it, and if they are caught, selling it to their customers and their clients, they could get quite some, quite
in their mind
feedback.
In the sneaky mind of a broker, though, it's like, look, if we make enough money off this to cover the slap on the hand, let's just keep.
Yeah, exactly.
You laugh at it, but it's actually true. You get away with anything.
It's like what? How much is that fine? A couple of mils. Fine, we've made a fair few $100 million. Yeah, just pay the bloody fine. We keep trading it.
That's like my window tints, for instance. I get £100 fine. Every time I get stopped and they clock my window tints, and I'm just like, yeah, you know what, £100 fine, whatever, man.
Naughty, that is. That's naughty.
I would rather do that than pay for it to be removed.
I'm trying to be like you.
Or like a parking fine. Sometimes it's cheaper. In central London, it's cheaper to get a fine for not parking in the right place than it is to pay for parking. So if you're there for like 6 hours, sometimes it's like £15 an hour in some places. And it's like, you know what? I'd rather just get fined, 40 quid.
This is insight to the life of a hedge fund owner.
And Parker, I feel like... And Parker, I feel like, I'm going to be gone for at least 3-4 hours. Why not?
Tut, man.
Yeah. So, going back to price predictions on Ethereum, I'd say optimistically, I could see about 5 to 10 grand coming in the next 3 years. But I'm looking more conservative. I'm investing conservatively as well. I'm not investing aggressively. I'm dollar average costing pretty much daily into my cryptos, because I still have to solidify my own investment, solidify my own back as well, just in case a crash could come in. We don't know, like Mark mentioned, what could happen tomorrow. Drew even said it could take place tomorrow. A crash could come in right now as we're speaking on this podcast, and we're not even paying attention to it. But
yeah, it's exactly what happened with XRP. I mean, it had its little run, didn't it? And then out of nowhere, it's like 0.2 now, isn't it?
Yeah.
Roughly
20p.
Yeah, 20p. Yeah. It's cheaper to buy XRP than it is a Freddo at the minute. Remember that?
Yeah.
Freddos used to be 10p.
Inflation, man. That's a prime example of inflation.
I remember even going to school and picking up a can of Coke for like 49, 50p. Those were the days, man. 50p cans of Coke.
If you invest, you should have bought loads of them and sold them now. You would have doubled your money.
Yeah. I'm sure most of them would be out of date by now. But I'm sure they'd still be worth something, holding it for, this is a can of Coke from 2000, 2004.
Retro cans.
Yeah. Moving forward, anyway, we got a few more topics to run through that a lot of you viewers, in fact, have thrown at us. From now on, you know what? Even the last couple of episodes, we've only listened to what the viewers have, what you guys, in fact, have wanted us to talk about, wanted us to discuss, and we only discuss it out of our own opinion and our own knowledge as well. And what most people are grateful for is that we have our own opinions on these things as well. Sometimes it can be quite hilarious. And this is why we're moving on to the next topic of account management, because we have some hilarious hilarious opinions on this, should I say. So firstly, I'm going to hand it over to Drew. Drew, what do you think of account managers and account management?
I've been waiting a long time to speak about this. Absolute bullshit. I mean, look, I mean, here's an example. Hi, my name's Dan. If you invest £1,000 with me, I'm going to grow it 10% an hour, 10% a day. These are the type of messages and DMs you'll get on Instagram, because you've ended up following maybe 3 or 4 of the top sort of followed guys in the industry. You'll get all these spams and whatnot. And unfortunately, a lot of people out there do fall for it. Now, if you're going to go down the account management route and you're going to invest in a company, if you like, A, make sure they're regulated. B, look into them, company's house, find out about the MDs, find out about everything you can about the company, essentially turn it upside down, the company, look into everything. But if you're looking at it from a stance of, and this certain viewer, I'm sure, was from a stance from Instagram, and I'll manage your account, or I'll link it to an AI or a copy trader that I've just bought for £20 off some sort of website, then if you make even 10% on that annually, I'll shake your hand and say well done. Because 95% of these, I'm happy to say 99, go down the drain, and they end up blowing your account. And if I'm honest with you, it's usually a CPA sort of thing, which means if a retailer, or if someone deposits into an account through a link you send them, the person that sends them that link will receive a commission. So usually something like $450 or something like that. Now, if people are trying to do 10 guys a week, or 10 guys and girls a week, that's $4,500 a week. That's how they earn their money. They're not looking to make you money. They're not looking to manage your account professionally. They're not regulated. They don't care about you. And that is why you have to thoroughly do your research and know your stuff before you step forward into the account management realm, or trust someone with your capital. And it's something I'm passionate about. My business is based upon this, and that's why I went the long-winded route, and I went down the fully regulated, the fully audited. Everything is completely legitimized, and that's why when you step into this world, you have to be squeaky clean. And unfortunately, I'm sorry to burst the bubble of all these Instagrammers, they're not squeaky clean. They are not. Yeah, that's my opinion on them.
I totally agree. In fact, if it looks too good to be true, it pretty much is. If someone's telling you that they're going to give you this amount of money back weekly, don't listen to them, because we know this. We've been in this industry for many, many years now, and we know that it is not possible unless there is very high risk involved. It cannot take place. And in fact, it cannot take place consistently either. Like the other day, I heard somebody made, I think, about 25% in one day. Now, that is a very, very good amount of gain. Yeah, but he won't be able to do that tomorrow. Yeah, in fact, if he tries to do that tomorrow, he could be down on his account by minus 25% instead. Yeah, it goes both ways. If they can make that much, they can also lose that much. If they're saying they double your money, they can also lose all your money at the same time as well. Yeah, so you need to be wary of these things. Also, another thing that you should look out as well is if they're advertising it and trying to pitch it to you, constantly, non-stop, and they seem like, how do I say this, desperate, stay away from them. They kind of need your money. If they were able to do that much gains for themselves, they wouldn't really need to advertise it out there. They would only, deal with private investors, for instance. Not public. At the end of the day.
I'll reinforce that. When you're looking at serious account management and as Ads mentioned, private investment, this is why the minimum investment tends to be in the 5 figures. Like, that's rare. Usually it's 6 figures. And this is because it's the whole costs behind the licensing, the whole costs behind your employees. If your fund might be split into different sort of, discretionary and things like this. The whole overheads and the whole process behind actually managing that capital is very in-depth, and it takes a lot of planning, a lot of time, a lot of resources, a lot of just everything has to be spot on. Now, if someone's saying to you, sign up through this link, put £500 in it, and I'll manage it for you, and I'll make you 10% a month, or even 5% a month, I'd be absolutely mind blown if someone did that from a regulated stance, and could cover all their overheads and could absolutely float a business healthily, sleep well at night, knowing that, and run it off £500 minimum investment.
Not going to happen.
It's
Not
not going to happen. It's so true.
So-
You know what Drew mentioned. I totally agree. Like, you know, it does cost a lot for these licenses. Myself and Drew have run through these licenses ourselves, and it does cost a hell of a lot of money. Mark is currently in the process as well, and even he can agree. You know, taking someone's, you know, £500 deposit, and you're only going to make, like, you know, half the profit for them. It's really not worth it. It's like the amount you're going to make on their money after you've given them the profit share. From £500, you can barely get yourself like a burger and chips. You know where I'm coming from. Whereas
100%.
if the returns look too crazy, like 100% a month, 50% a month, there's also the risk of it going minus 50% that month, minus 100% a month as well. So you have to look at it both ways. You know, if someone is claiming that they can do, well, basically anything above like 20%, they say to you, and let's say anything above 25, 30% is pretty risky. Yeah.
Very.
Anything around, you know, 5%, listen to them very carefully, then start doing your research and start understanding how their business model works, because they could be legitimate, but, you know, it wouldn't entice people if they said, yeah, I'm going to give you 5% a month, especially greedy people. Now, I see a lot of people being sucked into this. There's even been fake accounts of myself and so many of my other friends as well. People have made fake accounts on that, you know, mimicking their own accounts, for instance, and then they're going around following all their followers, yeah, and then asking them, yeah, do you want to invest? I'm this person, or I'm ads. Yeah, do you want to invest in me? You know, this is how much returns I'll give you. And then they just end up running away, for instance. Yeah, and I've seen it so much. And basically, it comes down to greed at the end of the day as well. Yeah, most of us know that these are scammers. Yeah, they don't show us any kind of licenses. They don't show us any kind of website. You know, they don't show us any kind of anything. But there is a sense of greed in the person that they are pitching, that believes at the back of their mind, you know what if he is telling the truth? What if he can double my money next week? What can it do for me? Yeah. That sense of greed is what pulls people in. And that is what they play on. These scammers play on these things. Yeah, all the time.
Absolutely. And I think sort of bringing it back to how I opened this topic is bullshit. Yeah, bullshit.
Yeah, it's true. You got to be careful though, because I've seen a lot recently, especially, as they send old screenshots of profits or old charts. Like I think I saw one like a couple of weeks ago about euro US dollar, and it was like 1.06, and I was like, well, it's not even been at that price.
Yeah.
3 weeks. So how is it? Why are you showing us months old? Why don't you actually show us real? And let me add on to something. Let me ask you both, actually, because obviously account management, we all have the same views. If they're not regulated or they can't show you some type of license, don't like play to your greed, or don't play to your fear of missing out, because that's what it comes down to. I've seen this guy send me a screenshot of he's taken this client's account from 1,000 to 3,000. My account could do that, and if I don't invest now, I'm not gonna get that. But let me ask you something. What is your opinions? I'm assuming it's exactly the same on people who do unregulated signals.
I'll comment on this a second. I mean, it's right. I'm going to speak. I'll answer this in two parts. First part is coming from someone who owns a capital management business, someone who deals with clients, someone who my best interest, and I only make money when my clients make money. My best interest is capital, like preserving it, and I've lost the word there, preservation, and essentially optimize on every upside while minimizing every downside sort of situation. Now, bringing it back to last week when we said, when you're stepping into any trade, stepping into anything in the charts, analysis, anything, you need to know what the worst case scenario is and what your worst outcome is. When you're following a signal, you don't understand what the reason is behind it. Is there fundamentals taken into account? Is there even technicals taken into account? Why are they doing it? Are they getting signals from someone else and just copy and pasting it? You don't know where that's coming from. You've got no thought process. And my honest opinion behind it is, if you truly and thoroughly don't understand why you're entering the market, don't enter. And that's essentially, that sums up signals. If you're going to follow a signal, it's because you've got you haven't got the skills to sort of articulate yourself in the market adequately, and B, it's really is or it's perceived as a get rich quick sort of scheme. And I promise you, you will blow your account. Maybe it might be a month down the line or 2 months down the line, because the probabilities tell me if you're following signals, you also don't know risk management. And that's a very broad statement, but and I say that with confidence, because if you're following signals, or if you do know risk management, you've done half of the hard work. Why are you not doing the other half on the technicals and the fundamentals? So my gut and my common sense tells me, for following signals, you don't know risk management. You're just in it for the money. You don't enjoy the process over the outcome. You don't know your worst case scenario stepping into anything. And probabilities tell me from a statistical stance, you will probably end up blowing your account.
Yeah. What I think of signals is that, yeah, you know what, pretty much Drew had it spot on, because it does come back down to risk management. You know, your risk appetite may not be the same as the person you're getting the signals off, for instance. Yeah, we might have a risk appetite of about 1%, risk per day, whereas the signal provider is giving you about minus 30% a day. He might have a massive risk appetite. He might not even have a trading account, and he's just doing analysis and sending you the signals. You know where I'm coming from? So, base yourself on, how far your risk can go. Everyone's risk appetite is different. Yeah. Most people's is very small, because you know what? Everything they earn, they work hard for, which is hats off, to everyone who does work hard for their money, in fact. Yeah. Hats off. And I'm sure, you know what, you wouldn't want to lose that just because someone is telling you do this or do that. Yeah. Because we have to work another however long it takes to earn that money back. Yeah. Do you get where I'm coming from? So understand what you're putting yourself through. If you're going to listen to a signal provider, understand their risk appetite as well. Does your risk appetite match their risk appetite? I've seen, I've also done this myself. In fact, I used to follow signals when I first ever started trading.
Same.
Yeah.
Same.
And
I think we've all been there.
We've all been there. And I thought, you know what, the guy's signal I was following, he's the Don Daddy of trading. Yeah, he must be right. I'm going to double up on the next one, because you know what, he's going to kill this trade for me, and I can make a fat withdrawal tomorrow once this trade comes in. But it's not always the case. The next trade could be a loser, and that is where you've gone triple on your risk. So it all comes back down to risk strategy, risk management at the end of the day, which nobody looks at. Like we mentioned on our webinar, on Monday that just went. Yeah. Everybody looks at how much they're going to make. Nobody looks at how much they're going to lose.
Absolutely. And I think there's a difference, and I'd really like to emphasize it. There's a difference between buying into a group or depositing into their CPA account and getting into this signals group for free. There's a difference between that and investing in someone that will present you charts with a thorough explanation behind that chart. Now, if there's a chart being presented to you and it's like, here's the fundamentals, here's the technicals, let me explain what these technicals mean. Let me explain what these fundamentals are. And this is the whole thesis behind the trade. And this is why I'm going to enter it. And here's my risk. I'm risking 1% on this trade. I know that here's my account balance. 1% equates to this. If I hit my stop loss, that's my worst case scenario. Okay, cool. But my upside potential is this. And then all of a sudden, they've done the thought process for you, and you've just got to sort of input your figures. Now, that's a bit different to just following a signal. For example, buy euro, US dollar, stop loss here, take profit there. You've got no clue what's going on, where, why, when, how. You're just doing that blindly. And what you've got to ask yourself is, this person you're putting your money into their pocket and you're following their signals, do you blindly trust them? Because if you do, crack on. But if you don't, and you've just met them on Instagram and whatnot, you're trusting them with your money. With your money that ads clearly highlighted, you've worked hard for, you've put hours into. Maybe one trade goes against you and you're 10% down. That could be a week's work, hypothetically, for some people. Would you trust that guy with a week's worth of wage in his pocket? Would you give it to him and trust him? And this is the sort of things you've got to think about. And that's where the retailers sort of lose, and where institutions and hedge funds and people who know how to manage capital really do optimize on the gains.
Yeah, 100%. So before we move on, I'll just tell the viewers the red flags you should mainly look for on Instagram. The main biggest, I think, red flag is if they show a lifestyle. If they show cars, holidays, I don't know whatever you think, a brand new MacBook, a brand new iPhone every other week because they've smashed it. These are the really big red flags. They drive around in fancy cars, going out to meals, holidays. If you see this and they have in their bio, copy my signals, that's the biggest red flag for a second. Second one is if they say to you, free signals, but you have to sign up with my link. So like Drew said, the CPA, they earn a commission because the way the brokers work, they make money when you lose money, and they'll pay the broker's bitch, who is the person who's bringing you on, money when you lose money. So what is their agenda? What are this educator that you've given your money to? What is their agenda? They don't want to make you money because a broker pays them when you lose. Okay, so free signals. What's the other signal, Drew? I'm trying to think of the main ones.
I've been sat here smiling because I've got about 50 to throw in, but let me throw a few in, right? If they've got FX in their name, block them. Block them. If they've got FX in their name, block them. If they've got some sort of like 100 pictures of a car, block them. Like, I mean, like this one sort of like it's the stereotypical A class, something like that, right? And another one is if they say, look at my reviews in my highlights and stuff, and they're trying to push, they're really 100%. Trying to push you. Yeah, they're trying to push you into believing them and things like this, then block them. And essentially, if they are what they say they are and they're about what they say they're about, you probably would have heard of them already. Like there's a few people in the industry that are killing it, you know, as you know, Ads knows them really well. People like Amnat and people like this, they're doing really well for themselves. I knew of them as soon as I stepped into the FX game, and they're still about now, and they're killing it, and they're growing at an astonishing rate, you know. But have I heard of, I don't know, Mr. FX from Southampton? No, you know. And it's and this is the sort of things you want to look out for. FX in the name, putting all sorts of like luxurious items and showing them off and boomeranging them 24/7. You know, if they have to show you they have money, they probably don't have money.
I totally agree with that as well. Yeah, you know, those ones basically who seem desperate are desperate. Those ones who, you know, want your £500, £1,000 deposit, like steer away from them, because the real proper traders out there would only take on large investors and would look after them properly. Other than that, you know, I've
just got one brief one to add in. If they've got retired the 9 to 5 in their bio, and they're below the age of 30, but they're still putting in 12 hours a day on Instagram messages, Zooms, because they're educating and things like this, I promise you, they haven't retired because they'd be sat on a beach or on a park having a coffee. They'd be fully retired, but they're not. They're putting in 12 hours a day trying to gather CPA. They have not retired the 9 to 5. Do not listen to them.
Exactly. Yeah, they wouldn't be, you know, selling signals if they were retired. You know where I'm coming from? Just they might have left their job because everyone is silly enough to pay them and or pay the broker and get them enough CPA for them to overtake their previous income from their jobs. So yeah, moving on anyway. This is something that Mark has a lot of knowledge in as well. In fact, all of us do, but I'll let Mark take the lead with this. As one of his viewers, you know, or one of his regular viewers, in fact, mentioned about leverage. And is it good or bad to have low leverage or high leverage? What is our look on leverage, basically?
I mean, I'll tell you my personal leverage. So I went from a 1 to 100 to a 1 to 30, just based on the fact that sometimes myself, I would maybe enter too much risk, like a 4% trade, because generally I enter about 2.5% per trade. So that's why I kind of reduced it just to kind of tame myself a bit, because we all do have some type of ego. Like you'll win a few trades. It's known as a hot hand fallacy. It's like you may know if you're a basketball player, you'll hit a few hoops, and then you're sure the next one would go in, but it doesn't. I generally like to reduce leverage lower and lower as my capital grows, just so I can counteract any type of greed that might come in. But with leverage, the question that I was asked to myself was, can you grow it from a small account? You can, but it's going to take a little bit longer. I'd say the max for a really small account would be 1 to 100. If you ever see like a 1 to 400, 1 to 500, what that's basically saying is for every pound you trade, you can take up to £500 worth of risk. So you kind of see the ratio going very, very negative against yourself. So 1 to 100 is the max I'd go. Reason being is because if you get really small stop losses, like 5 pips, you can use higher leverage because even if it hits that stop loss, you're still within the 1 to 3%. So you can, yes, as long as you're not getting greedy by over trading, or twin trading is a common thing that a lot like people do. They may have like a £500 account, but they'll twin trade 2 0.5s, but that's not going to be within risk management. You need to, let's say you're entering, like you've done all your risk management and all their calculations suggest you need to use a 0.3 for this one trade. If you twin trade it, you don't do 0.3 buy, 0.3 buy, because now you're double your risk. You need to do 0.15 buy, 0.15 buy. Okay, so with leverage, personally, yes, it's a good thing, but it can also be a bad thing just because of the greed. But the thing is you got to actually like remember is you're not going to get it overnight. Don't expect to become the best risk management overnight, because you win some, you lose some, you learn from your mistakes. Like I've learned from my mistakes of when I was like I've only been training like 2.5, started June 2018 or 2017. One of them. No, I started after first year, so first year of uni. But I was greedy. I was a greedy trader. Like everyone starts off with greed, but you slowly actually come accustomed to, okay, well, do I want to actually trade this Euro AED chart because it has about 6% volatility, and I'm going to use this level, and if it hits the stop losses, how much it's going to be, or am I going to buy a gold at 0.3? No, because it's a volatile, it's got about 7%. Am I going to trade Euro Shift or Shift JPY, which has lower volatility? So maybe you could use slightly more leverage to counter the volatility. But as long as it's within your stop loss bound of 1 to 3%, high leverage is good, but to a certain extent. So you just need to work on it. That's just my personal opinion. I'm not sure what Duran Ads thinks about that.
I mean, I think I do agree with Mark, and for the viewers at home, Mark's saying he risks 2.5% in a trade on average. You've got to understand Mark's a swing trader too, and I know he keeps his stops very tight and very clean, and that's why he's happy to I'm guessing, Mark, correct me if I'm wrong, happy to enter a bit more risk because he takes a lot less trades than me and Ads, and he will follow through with these. He will hold them for months. So, for example, for every, say I'm risking 0.25 a trade, but I am trading probably 10 times the volume of Mark. So it makes sense for Mark, every one trade Mark takes, every one trade he takes, he'll risk 2.5, because I essentially am risking that much as well, but in smaller increments in different areas of the market. But I do have a small sort of counter opinion on it, and I'll give you two scenarios. I've got two accounts. One's 1 to 1,000 leverage, and one's bad boy, and then one's 1 to 200 leverage. So the 1 to 1,000 leverage, I do not go over 15 pips on that account, and that is my personal account. I know exactly the situation I'm stepping into before I do it, and we've discussed this in the last podcast and this podcast, and I actually keep most of my capital on the higher leveraged account because I can gain the most from it. I can compound at a greater rate. My swing trades and the ones that I think, so for example, GJ at the minute, I do believe it's got major downside. I enter them on both accounts, on my day trading account and my swing, and the lower leverage swing I'll just let roll, and the ones where I'm getting in and out of the market, I'll utilize the higher leverage and the higher gains. But I also, of course, there is the risk of me getting stopped out and taking the loss. But I know what I'm risking before, which is, for me, I risk 1% a trade, and that's if all confluences tick. Usually, maybe I'd say on average, I do take 1%. I'm quite a risk hungry guy. And that's my personality. Again, know yourself, know how you trade. But if I'm ticking 3 out of 5 boxes, I'll do 0.5%. And that does happen. That does happen, especially if I'm trying to grow an account from, say, for example, recently, a 25K account, as Ads knows that, he has a funded trading program going on, and this process to go through that. I initially started off with 0.5% risk. And I was like, let me get my feet off the ground first, and let me start articulating myself properly within this capital. Let me grow it a bit. And then once I've gained a bit of capital on that account, I can start risking. And because I've already made the gain, so if I go back to square one, that's fine. I can get out of square one. I've done it before. I can do it again. And again, it's that mindset. But with leverage, I do believe if you're experienced enough, you know how to handle yourself, you know how to sort of roll the punches in the market, utilize it, use it. It's a tool. It's a major, major, major part of my game. And yeah, I like I said, I know how to use it in short circumstances, in and out of the market, and in long-term swings. And again, it depends what type of trader you are, how experienced you are. But for beginners or for someone who, you'll know when you're ready for a big old leverage. You'll just know. If for someone who's stepping into the market and they're like, look, I want to learn and I want to learn from my mistakes and I just want to slowly grow my capital. I'm happy with 2-3% a month. It's not my income. I'm slowly transitioning over time into this job and whatnot. Then stick with a low leverage. You're learning, in my opinion. And that's why I say to all my students. And I actually say to them, I will tell you when you're ready and I will give you the broker I use for 1 to 1,000 leverage. and just to clarify that, there's no CPA. It's just, look, there's the broker. But that's my opinion on it. It's a tool. I utilize it. I'm actually thankful that you can go to 1 to 1,000. But
crazy, man.
But yeah. I mean, yeah. Call me crazy. I know. But yeah, that's my opinion on it. And I'm sure Ads has got a similar opinion coming from a intraday trader.
Yeah, absolutely. So I kind of agree more with Mark. In fact, the lower the leverage, the better it is, for longer term. You may not be able to compound as fast, but you're also risking so much less as well. Yeah. We can easily, become undisciplined. The most leverage I use, in fact, I always use this leverage anyway, which is 1 to 100. I won't go any higher, 1 to 200, 1 to 400, 500. I don't think I'll go ever 1 to 1,000, because like
I know I'm crazy. Yeah. I know. Boys, I know. But look, it works. The risk management's on point.
You know what? I totally agree with Drew as well. Unless you know what you're doing, do not go for any kind of high leverage numbers at all. Yeah, you should be building it up slowly, learning your risk appetite, especially, if some of your viewers are beginners in the FX markets, you should be slowly building it up. I know people who are telling others, the first time that they're trading, they're like, open an account, 1 to 500 should be your first account leverage, which I totally disagree with, because I kind of feel sorry for the person they're, signing up, because that person is most likely not going to know what he's doing. He's going to mess around with that 1 to 500 account, and more than likely he's going to go past his risk parameters because he hasn't even adjusted to his own risk parameters yet. He's new into the market, that new trader. Yeah, he doesn't know where his risk lies at the moment. He's still learning, and straight away jump on a 1 to 500 account, he's gonna lose money. Yeah, pretty much, not instantly, but he will lose it very soon. He could blow his whole account. Yeah, whereas myself, I'm willing to risk about 1 to 2% max per day, not per trade, but per day. Now I'm currently around 1 to 1.5% per day max. And I'm happy with my 1 to 100 leverage. So I would also suggest, to keep yourself disciplined, in terms of, account growth, in terms of risk, especially. Look, when it comes to leverage, it can go both ways. Yeah. As Mark and Drew have mentioned, and including myself, I also agree with this too. Yeah. It can go both ways. You can lose a lot by having a lot of leverage, but you can also make a lot by having a lot of leverage. Hence why Drew emphasized, unless you know what you're doing, don't go any higher, than what you're used to. And if you got the skill to, trade, and let's say you got a skill of trading very consistently, once in a while you get a negative trade, which is fair enough. We all have those trades. We all have those days. In fact, once in a while we have those negative days as well. Yeah. There's good days, there's bad days. You don't know what is going to happen with the next trade. But it comes back down to my first point, which I mentioned about half an hour ago. Everybody is looking at how much they're going to make. Not many people are looking at how much they're going to lose. Yeah. And there is where, you'll get the 95% or the 5%. Yeah. 95% of the people are looking at how much they're going to make. Only 5% of the people are looking at how much they're going to lose. And it's those 5% of people who probably end up staying the most consistent over a long period of time, because they're the ones who are able to manage their capital over a longer period of time.
Absolutely. And I think coming back to it, and as you said, their experience is probably 90% of it, but also, and I mentioned this, and I think it's not highlighted enough in the industry. You really need to know yourself when you're trading. You really need to know your characteristics, your personality, your thresholds and everything. Like I said, I am a risk hungry guy. I understand my personality is quite fast paced, bubbly. I like to get in and out the markets, but if there's a swing opportunity, that's why I place it on my other account and just forget about it, let it roll. If it gets tagged out, cool. I'll move stop loss break even when it's appropriate. But I know, and as I'd said, my parameters, and I also I basically embrace the fact that who I am, and I can use that to my advantage. And that's why after mastering the skill, I thought, okay, cool, I'm ready for this leverage. Don't get me wrong, I did not open up my first account on 1 to 1,000 leverage. No way. But I think when did that's but 6 months ago now. 6 months ago. And I'm happy with how everything is going, but it works for me. And that's because I've drummed everything down to how I like to do things. And once you're at that stage, essentially speaking from a general view, regardless of the leverage, if your risk management's on point and your worst case scenario, your best case scenario entering the market, you should be able to manage the trade adequately.
Definitely. Like we mentioned, or like I said, you're somebody who knows how much you're going to lose before you enter each trade. So, any kind of leverage would work for you, whereas most people don't even look at those things. Yeah. But moving forward, and finally, we are kind of running out of time, but it's all right. And this is where you're going to hear Drew, probably the funniest, is Forex Mythbusters.
Mythbusters, yeah.
We mentioned a bit of this in account management. In fact, we mentioned if you hear this, if you hear that, but here is where you're going to hear it all. So Forex Mythbusters, where do you guys think, these statements lie?
Mark, I'm going to pass it over to you, and I'm going to let you ease this one in.
You want me to? Okay. So yeah, we've kind of mentioned it in the account management and signals. I'll grow your £1,000 account to £5,000 by the end of the month. Very common. You'll see it all the time in your DMs. Some person who's made an account of another person, like as said, he's had accounts of himself. I've only ever seen one account of mine, but it was taken down, luckily. What would you class as a myth buster?
I've got one. If you want, I'll come in just quick.
Go on.
Right. Do you want a Lamborghini just like me? Do you want a G-Wagon just like me? Deposit here. You're going to have this in 6 months. Myth busted straight away. Look, that car's probably rented. He's probably in Dubai. He's got it for 4 or 5 hours. You put in £500 into an account just for his CPA, it isn't going to grow and after you take your wages and your living costs and whatnot, I will be mind blown for someone who's grown £500 into an account that's been able to withdraw and then go and buy a Lamborghini. There's your first myth busted. Like you see them sponsored ads. Look at me, I'm out here with my Lamborghini, haven't done anything for like 10 years. I've just taken one trade, I'm stacked. Myth busted.
Yeah, 100%. You know what, Drew, I agree with you, because I see so many traders saying that, you know what, I'm chilling on an island. All I did was place one trade and I'm just chilling the rest of my time. We both know that you don't have to be peeled to, your eyes peeled to the markets, but we definitely need to keep an eye on our positions, not all the time, but very, very regularly. Yeah. So if somebody's saying, I took one trade today, the rest of the day I'm chilling, I only have to work for 5 minutes. Yeah. the rest of the day I can do what I want. That is so untrue. That's another myth busted.
Yeah.
Yeah.
I think a very common one is how when people send screenshots on Instagram, how, or even screen recordings, how you can get what's known as a fake real account. So what these do is brokers will give these educators like £100,000 demo, but the banner itself, like, when you swipe left or Apple, you like click the settings, it will show like a banner where it says real or demo. These are known as fake real accounts. So this educator can go out and say, oh, here's my phone. I've just made £6,000 buying gold. Oh, and by the way, I've sent it to all of my clients as well. And these are all the screenshots of all the trades that they've taken. And then you'll be enticed by seeing an account now gone from 100 to 106,000, but you don't know it's real or fake. Like, I'm not going to say what trader is online. I know who I'll tell you boys after who it is. Very, very clean. I knew from the moment I saw it.
I'll say it. I don't mind. I'll say it.
I'll
jump in. What's that guy? And he got the FCA smashed him over. It was
that's the exact guy.
What
I'm talking about.
he was
I know
like
a few.
tall, blonde, Lamborghini. Oh, it's I've gone blank. I know the one you're thinking of though.
Okay.
Who have you? Just say it, Mark. Don't worry, I'll take the hit. It was me, by the way, guys.
Wait, what did you say? Blonde?
Yeah, blonde. It's not Mark Fraser. I know that.
I know. All I know is, if I can jump in quickly, all I know is, I've definitely seen that, in my time in FX as well. And what I've noticed, in fact, is those have actually been banned for UK clients by the FCA. You're not allowed to, brokers have been warned that they're not allowed to give those kinds of accounts out. And it's the regulated, let's say, it was the dodgy brokers that were doing it, basically. Yeah, you won't see a very well-known broker, faking a demo account to a live.
Yeah.
And that also comes back down to brokers' knowledge as well. So, when you're choosing a broker, guys, and all the viewers as well, when you're choosing a broker, make sure they are very, very credible, because they would not want to lose their name over somebody so small, like, these kinds of people who want to fake an account. Yeah, it always comes back down to credibility. They will not lose their credibility over somebody who cannot even deposit, £200, £300, £400 into an account. Yeah, and show that as live rather than, 100K fake, for instance. So, yeah, I've definitely seen that. I haven't seen it recently, however.
No,
probably because they have cut down so heavily on that. Like, I used to see it quite a lot, not last year, but in 2019. it was big. You know what? Everyone was like, "Oh my god!" I've got a live account of 100K, but really, it's not. It's just numbers on a screen, for instance. Yeah,
There was,
however they are.
Yeah, there was one called Gurving Singh. Do you remember him?
Yeah,
Singh, and he got done for 3.5 million. I think was the figure he got done for by the FCA fraud and copy trade and whatnot. And it just goes to show, that it is out there. And as Mark said, we're going to bust that myth. But it's literally, and believe it or not, although it has been cut down massively, it still happens. Yeah. And I'm sure viewers out there, know this. You've been approached by them, and just be vigilant, be wary, question everything, question anything they're saying to you. And if don't get me wrong, they might be a legitimate trader or what. I'm not going to just tarnish everybody. Probabilities say though, common sense comes into play, and the probabilities say here, are they what they're saying they're about, but I think another sort of another myth to bust there is they're showing these accounts and whatnot, and then all of a sudden where they're saying, as Mark said, look at my clients, things like this, when they're showing you their account and whatnot, Mark touched on it earlier about you really do need to look at the figures that they're taking the trade on, because the things that they're sending around, probably from like 3-4 months ago, they've got a marketing team running it for them. And it's just, you can outsource that for pennies. I say pennies, few £100, but it's another myth that needs to be busted is the footage you're seeing or the photos you're seeing are probably so old. And it's probably just sat that, this is all, you need to understand that the realm of the CPA. And that's the important thing behind it. If you understand what CPA is, you can understand, are they trying to help you? Are they trying to grow you as a trader, or they just want your money?
Yeah, totally agree with that, 100% in fact. So, when it comes to like these, it just also comes back down to the first topic, or one of the first topics we mentioned, which was account managers. They will do whatever they can to entice you in. Yeah. And if, like Drew mentioned, if they have FX anywhere in their bio, yeah, anything of the sort, basically somebody who is regulated is not even allowed to advertise any kind of investment opportunities. Like, all three of us know this, especially Drew knows this as well. He's been through, the process as well himself. He's done all the laws as well that, backs up these financial institutes. You will not see a Barclays manager, for instance, advertising, invest into my Barclays fund, even though he will make a killing off it. If you do, he's not allowed to. Yeah, he's not even allowed to say what is involved in his job.
Yeah.
At the end of the day, yeah, because he could be giving out information, or he could be a target, yeah, for somebody. They're very, very strict. Like, you'll notice, even myself, I don't write nothing about Forex ever since we got licensed, especially. Yeah, I'm not allowed to write anything about Forex. I'm not allowed to write anything about signals. The only thing I can mention is education. Yeah, education, it's something that you're allowed to mention. And if you do see people, let's say, advertising education, for instance, you could probably think that, well, you could probably guess that, they're probably on the right side of things rather than, the fraudster side of things, for instance, rather than those people who come up to you and say, look, invest £500, I'm going to turn it into £5,000. In fact, shall I tell you a story? Yeah, here's a story, one of the last stories, in fact, before we do start wrapping this up. So I had a very big investor into my fund about a year or two ago. Can't remember how long ago now. And he invested a decent amount of money into my fund. Still is a ongoing investor as well. And he got enticed, or not enticed, but he got approached by somebody on Instagram saying that if you put in £1,000, I'm going to turn it into £10,000 by, let's say, few days or something like that. This guy rang me up straight away. He goes, this person is telling me that they can turn my £1,000 into £10,000. How come you can't do that? Yeah. He goes, I'd rather you do it for me. Yeah, why can't you do my grand into 10 grand? And I was like, it's not possible. It's really not possible. It's untrue. If you give him £1,000, you will never see that £1,000 again. Yeah, let alone £10,000. Hence why, we are going at the rate we are going at, because this is all that is possible in the current situation in these kinds of markets. And secondly, our skill levels. And thirdly, because of what we are allowed to go for, what we are allowed to do in terms of risk levels with other people's money.
Yeah.
Absolutely, yeah, absolutely. And bringing it back to like you said, ads, we can't, and this is the word for word, FCA have got it that by law you cannot mass market a hedge fund, which means or any form of regulated or licensed capital management. So if I right now could put and advertise my hedge fund on billboards and everywhere, Facebook, everywhere, I would. Of course I would. The more we can build a brand, the more traction we can get, amazing, and the more we can prove ourselves to the market. But you cannot mass market a hedge fund. You cannot scream, everybody come and invest in this, because once you present the sort of the figures and whatnot, the FCA understand the headache that will come with that, and that's basically why that's implemented. Another sort of myth that I'd like to burst quick is if someone approaches you and they're like, deposit in this link, I'll chuck you in my group, you'll turn £500 to £2,000 in a week, whatnot. And they're like, and you say, how long have you been trading? And that's the first question. How long have you been trading? And they're like, I've been in this game like 8 years. And they're like 22. Yeah. And I swear it's because they don't think that you'll assume their age. Their age probably won't be in their bio. You won't know how old they are. Say they've got a bit of a beard, they look older, for example, they're 22, and I've been in this game 8 years. How old are you? Like 27, 28. Okay, cool. You've got no way of proving that. You don't know them. You haven't met them in person. They're not. There's no CRM. There's nothing. There's no customer relation management. There's nothing. So from a stance of busting a myth, they'll probably tell you they've been doing this for so long and they've been smashing the game and they did this course and then they blew an account and blah, blah. And they'll just tell you what you want to hear. And you're like, okay, he's answered the questions in my head, the preempted questions that those initial questions that spring to my mind. He's put my rest, or he's put my head to ease and he's rested all questions in my head. I'm going to invest. He knows what to say, or they know what to say to basically play it down and get you thinking this is a no-brainer, you know?
Yeah.
So always question, how old are you? How long you been in this game?
Yeah.
You know, prove it to me. Where's your portfolio history? Or, you know, show me some charts, for example, from if you say you've been there X, Y, and Z long. I can show charts now from 2016, 2017. I've got them in my drive, you know? I can show you that. I can show you when all. Yeah. And it's because you look back and it's humbling, isn't it?
Yeah. My charts have changed like completely. Since when I first started, they've literally completely opposite of like what they were back then. But I'll add on to what Drew said. One thing to note though is IB agreements, so CPA. So IB is introducing broker agreement. They are being banned currently. So they've been banned in Belgium and they've been banned in Singapore. It's only a matter of time before the US and the UK and France and Germany, the big countries, start to get involved. And this is when you will start to see the real traders from the fake traders, because you will see the traders that you see are driving these flash cars going from Forex to then going to the next best thing, which might be Amazon FBA or drop shipping. You'll see them drop off when the demand drops. They'll go to the next thing. Demand might be higher, and then some regulation might come into play, and then it will drop, and then it'll go off to the next thing. And then you'll see them, because they drive this flash car and they've got this nice house, that they must be an expert in that field. I've seen it many times. And yeah, IBs will be banned in the UK very soon. I'm not sure when, but they will be banned.
Absolutely. You know, it's already in the process of taking place. In fact, sorry, Drew, I interrupted you. Go on.
I was just about to say, leading on from last week, the next big thing will probably be binary options. So,
oh yeah,
binary. That's where we all started, and I don't know how it's coming back up again into this world. But
it's climbing like amongst retail traders.
Wow.
I'm a retail trader. I'm not going to say I'm a professional. I wouldn't even say I know everything, but I see it climbing very fast, especially on Instagram and Facebook and YouTube. It's being pushed heavily.
Yeah.
Money in minutes is a load of crap.
It is.
I'm actually surprised that we've all seen that YouTube ad. Like, have you lost trade after trade after trade?
Yeah,
you know that. I'm even surprised. I'm even surprised they can mass market that. Although it's education, to get involved with that, it's like you've got to go through my broker. You've got to do this. You've got to do that, and that'll be cut down soon.
Yeah,
100%.
Definitely. You know, and well, we have gone a bit over time, so we are going to wrap this up here. But it has been a very, very funny one. In fact, today we shared a lot of knowledge. You know, we all learned a few new things as well. Everybody learned a few new things about Ethereum. I don't know too much about Joe Biden, but I will, you know, start to do a bit more research into what he's planning. You know, coming into his new position. A lot about leverage, a lot about account managers. You know, just basically don't trust them unless they are regulated or they have, you know, very, very good experience and backing. And the myths, we're going to throw so many more myths in next week as well. Let us know in the comments box below what kind of myths you want busted as well. Is this true or is this not true? We'll answer every single one of them for you. Once again, thank you all for plugging in. Thank you so much, Drew, one of the youngest hedge fund owners in the whole of the UK. Yes. Guys, trust me, this guy is doing very, very big bits right now. Also, Mark Fraser, amazing individual, got so much knowledge. Thank you so much, guys, for joining us today, joining myself today. I literally feel honored every time, you know, we jump on this, because we share so much high and energetic, you know, kind of vibrations when we conversate every single time. It's never a boring conversation. It's always highly, highly intellectual. And if our viewers can pick up from this as well, even like I said, 1% of this kind of knowledge, we have done our job and we are very, very happy.
Yeah.
But once again, thank you all for plugging in. This will be on Spotify, this will be on YouTube. Make sure you watch it, and we'll definitely catch you on the next session. Take care.
Take care.
Take care, guys.